Jim, you talk about it being painful moving from this in this chapter of growth to value. That's the exact same word that Ron Barron used to describe some of his funds unloading about 1.8 million shares of Tesla. As you said, it's about a quarter of the stake. Still says his long-term target of 10 years somewhere in the $2,000 range. But he talked about why he sold on Squawk. Here's what he said.
In the past 6 months, we've sold about 1.7 million out of our 8 million shares that we held. And we sold them between $450 and $900 a share, average $660, $670. And so we still own 75% of our stock. I'm hopeful we hold that for a very long, actually more than 75%. I'm hopeful that we can hold that for a number of years. I think that in 10 years, our target is $2,000 a share. And I think that could be light by maybe $500 or $1,000 a share. So we're looking for a lot more.
All right, Jim. So you commented on that on Twitter as well in terms of how people are going to read his decision. Becky said, why'd you sell? He said, because it was up 20x.
Well, look, he's a portfolio manager. He's not someone who comes in and says, I have to have 100% Tesla because this is my favorite stock. He's been right all along, okay? And because he's been right, he did not want to be the Tesla fund. David, you've talked to a lot of managers who own stocks that just kept going up and up and up. And if they don't scale back, then all they are this one stock.
Right.
And that is irresponsible. Totally. He loves Tesla. No. There's no doubt.
No doubt. No doubt. You mentioned portfolio management. Remember, we talked a lot about that around Melvin. Because it's not just being a great analyst. It's not just about picking the right stocks, although that is certainly a very important part of it. But it also is appropriately managing and mitigating risk. And when one name gets to be more than 50% of a certain fund, that's just, you're not managing your portfolio properly, right, Jim? And so, listen, we can't argue with Ron Barron. I don't know. Did you hear him? I mean, I loved he said $2,000 target, but it could be $1,000 more than that. So he's even pointing to $3,000 a share for Tesla, which would make it far and away the most, the highest valued company in the world if it were to get there and Apple were not to have moved up in that time or any of the others. But you can't blame him. And when you listen to him, you know, I mean, 5 years ago, he kind of laughed a little bit at his targets, but they were all met.
Look, the stock was at 900, it's down to 650. I think there will be people who say, you know what, he's been selling, he's done selling. You know, David, that Kathy Wood bought some yesterday. Mark.
Yes.
So the question is, will she save Tesla?
She bought a lot of Palantir, too.
Oh, boy, she goosed Palantir like what, a couple of 2.5. Now, we're talking about the finest manager of our time. What are you laughing about?
What time is that? Is that 4 o'clock yesterday?
It's 9:06.
9:06. Okay,
yeah.
That's the time.
But she bought 23,000 shares of Tesla. So will she stop the decline in Tesla, David?
23,000 shares? I don't know if that's going to do it.
Well, because she should step up to the plate.
2 million shares of Palantir.
2.6 million, Dave. You're missing the other buy.
Oh, I must have missed the other buy. Thank you.
Yeah,
I see that. Yeah. That's right. Another 670,000. Thank you, Jim.
She must have watched when I said she liked Zoom. She's right up there buying Zoom. Not true. She doesn't. But I do think that it's going to be Tesla and Kathy Wood. And if they hold the line, then even Mike Novogratz, who was in my Twitter feed saying, this is it.
Hold the line. Are they going to hold the line on the SPACs, Jim?
It's Braveheart.
You watch those? That reminds me of watching the Twitter feed on all the CCIV bulls. Hold the line.
Well, David, there's a devastating note about one of my absolute favorites that you brought to me, David. I'm talking about QuantumScape.
Yes.
I mean, the analyst just loves it. Baird. It's called electric crude. He talks about faster charging, safer, longer lasting, solid state, $1 trillion TAM. Jagdeep Singh. But David, he called it a neutral.
A neutral after all that.
He's a turncoat.
QS.
He's a turncoat.
Carl, yesterday, a lot of these growth names, as Jim, of course, is alluding to, suffered significant losses. Obviously, as you might expect, many of the SPAC names. There's a look at QuantumScape and some of the others, a number of them coming public through SPACs. And, you know, I mentioned CCIV. It's interesting, Jim, you know, that you wondered, there were a number of people focused on it when they finally got to announce the Lucid deal, which they did. And then you saw the share count, 1.6 billion shares outstanding.
Yes.
But there were still many people who said, OK, that may be the time. But they were afraid to short it because who knows? It went from 10 to 60, but it has gone promptly from 60 to 23.
It's astounding. And there are people who are this is it. I mean, the opposite of Ron Barron. There are people who own only this. And, David, they are one of us to say great things. And, look, I'll say a great thing about it. Interesting car.
The car's beautiful. I mean, I don't know how many they're going to make, but it's beautiful.
But, Carl, the hype of some of these wasn't the companies. I want to make that point. It wasn't the companies. It was individuals who just said, you know what, this thing's got to go up because it's great looking. And it's got, I mean, the same thing with Fisker, by the way. When I had Henrik Fisker on, I was a doubter, but then Bill McDermott from ServiceNow joined the board. The car's good. He's got Foxconn building cars. He's got Magna building cars. There's a lot to like there.
Shepard Smith here. Thanks for watching CNBC on YouTube.